What's up, family? Keys from Sean here. So today I want to answer a commonly asked question. The question is, can you get approved for a home loan with a credit score lower than a 580? There's a lot of misconceptions surrounding down payment, pre-approval, and credit. I don't work for a mortgage company. I am not a lender. But to my understanding, you won't know where you stand until you apply for the loan. So don't just guess. Don't go with these credit scoring companies and just assume that you won't get approved and you won't qualify. So get out there, apply for that loan, get pre-approved.
If you're someone that wants to buy a home and you're dealing with challenge credit, I am a lender, and I'm going a little deeper than what the young man did so that you can know how to navigate and prepare yourself to become a homeowner. Hi, my name is Robert, for those of you that don't know me. And on this channel, we simplify the home loan process. Let go. The reason I'm doing this video is because I've had two people over the last week and a half apply, and they really wanted to buy a house because of certain circumstances. And some of you guys may be dealing with those circumstances as well. Things such as your rent increasing. A lot of folks have been talking about rental increases here recently, and everyone has that number where the rent just gets to a certain amount where you're saying, hey, this doesn't make sense anymore. I need to own my own. The second reason is those of you that have been renting and you feel like you're paying a premium amount, but the landlord, the property management, the property that you are renting isn't in line with what you think it should be, meaning there's some disrepair, they're not keeping up with the maintenance, so on and so forth. And then the third reason is your neighbors or your neighborhood. Those are the reasons that I'm seeing that people are reaching out. But it's disheartening for a lot of you guys because you've not addressed past credit ills. The point of this video is to encourage you. You can purchase a home. More importantly, in my opinion, you don't want to wait until you have one of these conditions that in essence make you feel like it's a 911 for you and only be discouraged because you can't move forward. So you want to stick around to the end. We're going to give you guys some actual steps that you could take, free 99, and I know that it'll be a blessing to you. Whenever a lender, in this context, a mortgage lender, pulls your credit information, we're pulling from Experian, TransUnion, and Equifax, and we're going to take the average, the middle score of whoever is on the application. That's very important. And 620 has been that number for all the loan types, conventional, FHA, VA, USDA. You should be able to get some type of deal done if everything is in line. And so for those of you that are under a 620 credit score and have collections, even those of you that have a 620 or higher and have recent collections, you really want to understand these two free websites. Okay, let me blow this up a little bit. And the first place I would admonish you to go to is the annualcreditreport.com website so that you could get a free copy of all three repositories, Experian, TransUnion, and Equifax, and find out what these folks are saying about you and your information. And so when you go to that website, it looks like this, annualcreditreport.com. And as you can see here, you could go weekly. Free weekly online credit reports are available from Equifax, Experian, and TransUnion. Credit reports play an important role in your financial life, and we encourage you to regularly check the credit history. So off the top, ladies and gentlemen, you have no more friction, no more barriers for you to get the information that is being presented to lenders about you. And I think that is a very important place to start because most of us don't know what's on the reports. And if you don't know what's on the report, how can you then start fixing, correcting the behaviors that you need to correct so that you can present yourself in the best credit score possible if you're looking to borrow money, right? You can't. Moreover, how can you have someone say that they're going to repair your credit and you don't even know what's on it? And so, not a big advocate of credit repair and things of that nature, but some of you, due to time or just preference, you want to pay somebody. Well, you have to know what is on your report. This is the place where you could get it, annualcreditreport.com, right? Let's move forward. The next source, free 99, okay, is the CFPB, the Consumer Financial Protection Bureau. And that is an entity created by the government to help consumers advocate for themselves. And there is a treasure trove of information here. Credit, CREDIT. And it's indexed all of this information that you have available to you. Credit reports and scoring. If you click that link, this is where you could begin educating yourself, because this is what we really have to do, ladies and gentlemen, to understand how your credit actually works, what should be there, what shouldn't be there, so that if you're in a challenged position, you can start correcting the errors of your ways, and more importantly, not get fleeced by a credit repair company doing something that you could have done yourself. You have to learn and educate yourself. You don't have to get it all overnight, and you really don't want to try to wait until one of the circumstances that I cited. Let me get here. You don't want to wait until you're ready to go, because you're tired of the rent increases. You're tired of how the landlord or the property managers aren't taking care of the property. You're tired of the neighbors or your neighborhood, and you want to move around. That's not the time to find out that your scores are not in an optimal position. Remember, here's the takeaway. Reactionary people have a poverty mindset, and proactive people have a wealth mindset. That's not just in money, that's in anything that we do in life. So we don't want to react, we want to be proactive. When you are looking to get into a home and you have challenged credit, there's something in the lending industry that we call compensating factors. Let's go over here. Here are some of the typical compensating factors that we consider when you are borrowing money. That's if you have great credit or challenged credit. It makes sense that you want to have a strong, consistent housing payment history. That's chief, especially when you're borrowing money and you've had a challenge pass. This is the number one. How have you paid your housing over the most recent 12 to 24 months? And I would say 24 months. And so this is a very good compensating factor and a future predictor of how you can handle said home, if we meaning lenders and yourself, can make a case to overcome challenge credit. Now, the second thing is cash. Cash is king. Always has been, always will be. But significant cash reserves. Let me define significant, because I don't want to intimidate you. Say the proposed house payment that you're looking at is $2,000, just for easy math. A significant cash reserve would be after you closed on said home, your down payment and all your closing costs, and you get the keys. After that, you have $6,000 or 3 months of your pity payment, principal, interest, tax, and insurance. So 3 months of reserves of whatever the total payment is what I would consider significant cash reserves. For the intents and purposes of this video, to help you out, 3 months of your principal, interest, tax, and insurance payment on a proposed home after everything is said and done that you have access to. Checking, savings, something that you can liquidate. Even in a 401k, if we understand that you can have access to pull those monies out prior to retirement. Not advisable, but it works. Then large down payment. That's in that cash category. If you've had some past ills and you say, you know what, I'm going to put 30% down, you got a lot of skin in the game. That takes a lot of risk off from the lender, because they're like, well, you know what? They're in this with us. We're partners. And if something happens and we have to take this property back, then we can recoup our monies. So the larger your down payment, the better. Low or non-housing debt, non-housing debt, okay? Credit cards, student loans, car loans, signature loans. People that have no debt, again, that's less risk, especially if you're coming from a challenged credit history. Minimal increase in the new housing payment. What's minimal mean? Let's say that you don't want to go more than 150% of what you're currently renting now. So if we have $1,000 current monthly payment, that means the new principal, interest, tax, and insurance payment won't be more than $1,500. No more than 150% from what you're currently paying is a compensating factor. All right. Now, additional verified income or residual income. Now, this is very good. And I actually have a case study that we're doing right now. Lord willing, the House of Praises will be closing here pretty quick. They might even be watching. So obviously, we're not going to say any names, but we want to go over the case study to help those of you understand that this is possible. But verified income or residual income. You might have a spouse that's not on the application, but has extra monies coming into the house. Okay. That's verified income that you're not qualifying with. Residual income. I've had people that have gotten large sums of monies from a lawsuit and they get annuity payments for a certain period of time. There's a lot of ways this can manifest, but those are strong compensating factors, right? To help overcome the challenge credit. Strong credit history or conservative use of credit. And so you might be saying, well, you know what? How do you have strong credit history if you have challenge credit, right? Here's the deal. Prior to the challenge credit happening, what was the history beforehand? That's where most of us that have challenge credit miss the plot. It's a pattern that we're looking for, right? And the pattern is this. Everything was Gucci, right? Then we had some hardships. And then now, after the hardship, whatever this period of time is, we want to see everything is back to normal. So this is what we're trying to establish as lenders if you're looking to buy a home with challenge credit. But these are some of the compensating factors that you need to have or start putting together if you're looking to get into the market, onto the housing ladder, and you've not corrected those issues with your credit. I want to ask you guys a question. If what I've just said made sense, here's the question. What other compensating factors do you think would fit in this bucket? Maybe there's some that I haven't thought about or spoke about in this video that might help someone that is going through this process. If you don't mind, put it down in the comment section so the community, we can all win. And I thank you in advance for everybody. Let's get back into those of you that are wanting to move, right? I got to get out of here. Why do I have to get out of here? I'm tired of these rent increases. I'm tired of the property condition and what I'm paying. These neighbors of this neighborhood, it ain't that no more. You feel me? We need to move around, right? And I got challenge credit. How is that done, Robert? Okay, glad you asked. Let's look. Let's look at extenuating factors that we as lenders will look at if you've not corrected your actual credit score. Extenuating circumstances usually refer to a specific documented event that caused a credit problem. So in my example here, everything was Gucci. Then we had an extenuating circumstance here that caused the credit behavior scoring problem that says something's going on in this period of time. Now, and it could be documented, such as a serious illness. That's an extenuating circumstance. That can be documented. I had a client years ago, they were married and the spouse unexpectedly got in an accident and was killed. The other spouse that was at home was a domestic engineer. Now, income is gone. Guess what happened? There was a rough period of time until the ship was righted and the credit went south. That's a documentable illness or serious problem that happened that could be documented. And prior to that situation happening, that hardship, everything was Gucci. You guys get my point. But things such as job losses, major life events, and they are typically used to explain past derogatory credit rather than offset present underwriting risk. That's very important because, see, a lot of you guys come from the mindset that, you know what, in your mind, whatever was going on is over. Let me give you an example. Say you are someone that filed a Chapter 13. Your creditors at the time said, you know what, we'll take discounted amounts. And then you have a trustee and you're making that payment to the trustee, and the trustee is distributing the monies to the creditors that agreed to take a lesser amount. And this happened at one period of time. Let's say this happened in 2020. So let's say in 2020, everything was completed and it's over. So from 2018 to 2020, this is the hardship. This is where stuff went on. From an underwriting standpoint, what we don't want to see after 2020 are current late payments. All right? That's gonna tell the underwriter that there's still risk here. Whatever that was going on that was causing this has not been addressed, or maybe there's something new, but there's still risk involved. And that's what you guys have to realize if you're looking to purchase a home and you've not righted the ship yet. Let's go through a real life case scenario. Someone watch one of these videos on YouTube, probably watched me for a while because you got to build that trust. And they reached out. Now they reached out to me after having reached out to one of the big boys, the ones that's always advertising. You guys know who it is. And it's no shade to them because that's what most people do. The one that you see in your face all the time, you assume that they're the best. I'll just put it there. Or if they're local, you assume that they're the best. But anyway, after talking to whoever they reached out to that they thought was the best, the lender kept telling them that, you know what, your credit is challenged and the underwriting risk that we assess is greater than your extenuating circumstance. And the extenuating circumstance in this case was there was a car accident, the person couldn't work, and then during that time frame, they were able to achieve their 100% VA disability status, and things got back on track. As a result of that, in the most recent 12 months, there were late payments. And so that's what the other lenders were saying, hey, we can't get it done. So as I said, it's a VA loan, which matters. Your loan type matters. But the application, the middle score was 586. And like I said, recent late payments within the most recent 12 months. After watching me on YouTube, they reached out and they had a consultation. Why does the consultation matter? Because you need someone that's going to listen to what it is that you're trying to achieve and have the ability to discern if this case is worth moving forward, so that if you decide to move forward, they can properly set expectations. So your lender matters. Said all that to say that lenders matter. There's levels with everything. Let me reiterate. Consultation is important because in the consultation, you that are looking to buy with challenge credit, you can't come to the consultation like you know what's going on. You have to be forthcoming and be able to articulate what went on so that the lender that you're talking to could say, you know what? Yeah, we could get that done. But this is how it's going to happen. It's not the traditional quick, because you have an extenuating circumstance. And if it was quick, I probably would have not spoken to them because they had gone somewhere else. I'm going to say this. If it was easy, everybody would do it. In the lending business, we call those vanilla files. Everybody wants vanilla files, right? But everybody doesn't get them. That's not real life. And so you need to make sure when you're reaching out with an extenuating circumstance, this is the question that I would ask. When is the last time you did a manual underwrite? Manual underwrite or refer eligible. See, that could save a lot of your time because time is money. Time is very valuable. So anyway, listen to them on the consultation. I said, you know what? Based upon what you're telling me, I think we have a case. I believe I could get this done because I've done it before. This is what we have to do. And here are the timeline expectations. Very important, because that timeline expectation must be reiterated to your realtor so that when you're making an offer, you're making it with enough time, and everybody's not always, where we at? That don't work. Your lender matters. Now, number 2, valid extenuating circumstance. Now, here's the deal. After we spoke, we had a meeting of the minds. We said we want to move together. The next step was you got to submit this application, and I need all of the documentation to validate what you just told me. Not what you heard and what had happened, was documentation. I cite her all the time, my mentor. She told me, Robert, if it's not documented, it didn't happen. So if you do not have documentation, then you're wasting time. And this is akin to the credit situation that a lot of you guys waste time and money with by hiring folks to do something that you have no idea what they're doing, disputing, which you can do for free, and it doesn't work because you don't have any documentation. You saying that you had fraud committed, maybe that worked 20 years ago, but it don't work no more because you have no documentation. You didn't file a police report. There's no documentation. Doesn't make sense. I'm hearing folks are using sex trafficking now to try to move the needle. Come on, guys. If it can't be documented, it didn't happen. But back to the loan. So they were able to supply the information. And here's the deal. 24 hours. Quickly, guys, quickly. Because time is of the essence. When you're working on loans and things of that nature, here's the ratio. Every one of your days is equivalent to 3 days when it comes to lending, especially when there's extenuating circumstances. So they returned the information quickly and it was documentable. Now, I'll say this as well, because some of you guys have a problem with this. I don't want them all in my business and this. You know what? You're not going to get this money. You need to go sit on the sideline, get your credit to the place where you don't have to answer some of these questions, right? And that might take you 12, 24, might take you a while. But if you got extenuating circumstances, you need to play ball until you get the keys to your home. Number 3, this is what they had: strong housing history. You cannot have recent lates, okay, on your credit report, and those lates, those collections are comprised of you breaking leases. That's a no-go. You need to stop. You need to settle that. And the way you settle it is you find the most recent late, and then you need 12 months minimum from that standpoint, especially if it's FHA. 12 months, no late payments anywhere, and making your rental payment on time, all the time, every time, and it has to be documentable. But in this case, they had very strong history, which made me even more confident that we could get this done. And that was asked during the consultation. Then we get into the cash position, but that's number 4. See, before I wasted these people's time, I need to know we had these things before I waste my time, because I don't get paid if the loan doesn't close. You follow me? So I'm in it with you, right? But they also had strong cash reserves. Cash is king, baby. Cash is king, right? You got a lot of cash, it could cover a lot of ills. It's kind of like that old adage in the sporting world: win, baby, win. A lot of these professional folks, they're not the greatest moral character people in a lot of cases, but when they win and people overlook it. Well, cash can cover a multitude of sins. That part. That's how you can buy a house if your credit is challenged. If you don't want to go that route, let me go back to the top. You want to go to annualcreditreport.com, pull your credit reports every week if needed, and find out what's on them. You want to list the most recent late. From there, your clock starts. Minimum, you need 12 months, no late payments. Number 2, no collection falls off your credit report. Doesn't mean it's a deal killer, but we have to factor in some type of payment. So understand that. You might not want to deal with a collection, but you got to be able to absorb FHA, the young man mentioned. We're going to factor in 5% of whatever the outstanding balance is. And if you can absorb that in your credit, debt to income ratio with the proposed house payment, you possibly can move forward. And here's the third thing. It's really simple. It's the utilization. On your revolving lines of credit, best case scenario needs to be 9% or less. Those people are going to have the highest scores. And here's the key that a lot of people don't realize: the frequency in which you make your payments. Get in the habit of paying your credit card balance off every Friday. And hopefully you're not living on credit because of the issue of you not making enough money. That's credit repair right there. Free 99. It might take some of you guys longer, but that's what it is. So now, here is where we are. If you watch this video to this point, let me know if you got some value. It really helps out, guys. I like to know if I'm just talking in the wind. And shout out to those of you in the community and those that watch the video. You guys give a lot of feedback. And I got to ask of you as well. If you really find a video that resonates and you say, you know what, Rob, good video, take one other step and just point out one thing in the video that you liked. Why? Because that helps me help other people. This is a community. We're all growing. So I thank you guys in advance. If you watch to this point and you're saying, you know what, everything you're saying resonates, man, what's the next step? Next step is schedule a consultation. How do you do that? There's a link in the top, either in the top pinned comment, but for sure in the description of this video. And this is what it looks like. There's several resources here, but you see that one shaking? It's doing the Harlem Shake. That's that schedule, that 15-minute free consultation. The first 15 minutes is free. If you're not ready to schedule the consultation, then take this peace test. And that is going to allow you to get a gauge on where you are. You're either, I'm not there yet, I need work, I'm in the middle, or I'm ready to go. Those are the things that you can do immediately. And lastly, if you're not ready to do those two, then watch these next two videos. I've curated them just for you to continue your education. So my time is up, but I thank you for yours. Guys, let's be good to one another. Let us let grace abound, and you guys stay blessed. Indeed.